Hello, everybody, and welcome to another Bybit live stream. We are here today with an esteemed panel of DeFi OGs, Bybit experts, and crypto influencers and experts. So we are very excited to bring this to you today. And remember, we have a Bybit official giveaway ongoing right now. We've got 36 million PEPE tokens to give away. And all you got to do is just answer some questions which are below the video. But if you're on YouTube, you might have to click over to the Bybit website because that's where the questions will be. And not only that, we're also giving away some pioneer NFTs from one of our guests, YieldNest. And this gives you exclusive rights in the YieldNest protocol, including a 15% boost on your seed yields. And also, if you sign up to Bybit today, you will get a special gift box for new users. So that's what we've got going on today. And the theme of this live stream is a Grow Your ETH Masterclass. So this is the first time we've done something like this. We're all about education. We're all about bringing decentralized finance to a wider audience and helping people come in and onboard via Bybit Web3, which is our easy onboarding system for those people who are curious about the world of decentralized finance. And it's all there, Bybit Web3, you can check it out. So without further ado, so how you say that? Let's get on to introducing our panel. So first up, I'd like to say hello to Sam Kazmian. Hi, Sam.
Hey, how's it going, everyone? I'm Sam, the founder of Frax Finance, and I'd say Frax is best described as the decentralized central bank of crypto. So if you've been in DeFi or crypto for a while, you might have heard of Frax, and we issue multiple important assets like Frax Ether, which is top 5 LSD. So glad to be here. Thanks, Nathan.
Nice. And LSD is liquid staking derivative token, right, Sam? So that means you can swap your normal ETH for Frax ETH, and then you get like extra ETH automatically added to your tokens over time. Is that right?
Yes. So a liquid staking token means that when you hold it, it gets the yield from the proof of stake validators of the Ethereum blockchain. So the Frax Finance protocol maintains an array of Ethereum validators that the protocol is running, and the yield from that basically goes to staked Frax Ether holders. It's a token. You can hold it integrated in DeFi. Also, there's a lot of exciting integrations coming that we're going to describe on this event.
Nice. So yeah, we'll get into that. Basically, there are tokens where you have your ETH and you basically grow your holdings just by holding the token. So that's excellent. Thanks, Sam. Next up, we've got Dio from YieldNest Finance. Hi, Dio. Hello, Dio.
I don't. Oh, there. Yes, I'm live. Hi, guys. How's it going? Good morning, good afternoon, good evening. I'm Dio Brands from YieldNest, and YieldNest is a liquid restaking protocol and derivatives protocol, and we basically take liquid staking derivatives or ERC20 tokens or any tokens, and we restake that to other different components in crypto. So not only securing the Ethereum network, but also securing like other Layer-2s or other components in DeFi. And yeah, we just went live around 4 weeks ago, so we're a little bit younger than Frax, but yeah, we are live. You can visit our website. And you can see there like YieldNest and our liquid restaking protocol with simple to understand risk-adjusted return, like restaking strategies where a user can come in, pick the strategy that they like, click, and earn a juicy yield in a very safe, secure, and easy to understand manner. Yeah.
Nice, thanks. And we've also got Cryptos Cobra. coming at us from Norway, is
Hello.
it?
Yeah. Hello.
Joining.
My name is Anders, and I run the YouTube channel called Cryptos Cobra, where I share kind of Bitcoin and all types of crypto tips, new projects, etc. So I'm glad to be here.
Yeah, thanks for coming. And we've also got Emily Bao, the Web3 evangelist from Bybit Web3. Also, I got to say, one of some of the coolest hair in Web3 also, I would say.
Yes, purple color. Yeah. Hello everyone. GM is Emily again. Yeah, I'm Emily. I've been in crypto industry for 6 years, and in this bull run, I'm gonna all in Bybit Web3 because we want to make Web3 fun and we want to make you rage. Yeah, I'm very excited to be here in this panel because we got amazing guests. Nathan already introduced all the guests here. I just want to say, yeah, I really like Frax. It's one of my favorite DeFi projects. I've been participating in the liquidity mining for Frax since the very beginning, at the end, around the end of 2020. Yeah, I miss the old good time, the DeFi summer time. And also we have Yield Nest. I just learned about this new projects. Seems they're doing something really cool and fun with the new approaches of the DeFi. So I'm really excited and eager to learn about the new projects today.
All right, excellent. And also, we have a slide that shows some very special news from Bybit because we just became the second biggest crypto exchange globally in terms of market share, according to a Kaiko report. So yeah, we've been celebrating that news and very thrilled to announce that and be part of that. So yes, and if you want to be part of the Bybit family, you can sign up now and get a free bonus for all new signups. And once again, put your answers into the questions below if you're on the Bybit site, and you can win some PEPE tokens, you can win a Yield Nest NFT, and keep your questions and comments coming in. Yes, take that ETH poll, share up to 36 million PEPE tokens. So pretty big prize there. Okay, so what have we got coming up? We have the ETH Spot ETF. I can see already some people have been sending their questions in about that. That is due to launch next week, according to Bloomberg. We also have a section on how to grow your ETH, right? So, you know, you've come in, you've bought some ETH, it's sitting there in your wallet. You're like, oh, okay, maybe I can do something with this. Well, we got experts to show you how to do that. And when we say how to do that, I mean, you put your ETH in, you get more ETH. It's like magic. Also, the next big thing for Ethereum, like, can Ethereum drive the second half of this bull run? We'll get into that. So we'll look at some price predictions and what is coming up, coming forward. Okay, so yes, I have some slides to take you through the ETH ETF. So that is due to launch next week. Now, we have seen what happened with the Bitcoin ETF, which was, I think, the most successful ETF launch ever. And everyone's wondering, can ETH replicate that? Well, that's an interesting question, because if it can, then ETH could do really, really well. So yes, just what is a ETH Spot ETF? Okay, so just very quickly, an ETF, it's a type of investment fund that's traded on stock exchanges like a stock. So an ETF essentially like holds a bunch of assets and they issue tokens, or not tokens, they issue shares based on their holdings, right? So an ETH Spot ETF essentially has to buy a bunch of ETH, hold it, and then they issue shares against it. So when people sell those shares, the ETF goes and sells the ETH. And then when people want to buy the shares, the process is they buy the ETH and then they issue shares against it. So what this does is open up a whole new market for ETH, right? Because at the moment, buying ETH, it's quite easy if you go on to Bybit, but there's a lot of people who even doing that might be a little bit complicated for them. They're more comfortable buying stocks and shares and holding it in their brokerage accounts, right? So maybe perhaps some people who are just like not comfortable with like the very online internet experience that crypto can be, this basically then allows them to participate in the party that crypto can be. So basically, it allows people who are a little bit uncomfortable to get access to Ethereum, and it also allows institutions to get access to Ethereum in a regulated way. And when we say institutions, we're talking about big money, like trillions of dollars that are managed by, say, pension funds or family offices, that kind of thing. They have struggled to get exposure to crypto because there's been some regulatory difficulties for them. And the ETH ETF basically makes a regulated product for them to buy. So that's basically what the ETH ETF is. And I have a couple of charts on how the BTC ETF grew, because we need to know, okay, so this sounds good, but like, what does it mean for the price of ETH? What could actually happen? Because we saw Bitcoin, I'm not entirely sure, I don't have the facts right at hand, but it basically did, maybe doubled in price, maybe tripled if you take the price way back from October, just on the ETF news. So can ETH do that? Can ETH get to a tripling, which would be like, over $9,000? We're not sure. I mean, one of the risks is that some people who have been holding the Grayscale Trust ETH might start selling. And actually, we have a question on that. Someone got into the chat and they asked a question, and I might just throw this over to the panel. Ethereum ETF approval, sell the news. Does anyone have an opinion on that?
I think it's a really big milestone for the Ethereum community as a whole, and I've been in crypto for a long time, including, as everybody does here, right? It's such a big milestone coming from, when I entered ETH, was like a couple of dollars. I entered very early, and it was like this weird thing. So what are we doing? And I think the best analogy is like fuck around and find out, because it's like we're testing all these things, and now there's an exchange traded fund for this Ethereum asset, right? And as Nathan said, it's very hard to access these complex DeFi products from a regulatory way or usability way. But now that ETH is not a security, you can actually wrap things around ETH and do all these strategies around ETH. So I'm very bullish on ETH itself, on the ETF news, and also all the things around it that will become possible because of this kind of regulatory approval stamp. And I see, it's a very positive thing for our industry, and it's a very positive thing for obviously also Ethereum itself. So I think it's going to be huge. I do indeed think it's going to be a little bit. We got a bit of a fake bull run, in my opinion, when the Bitcoin ETF got approved, because we got all this new inflow from this institutional inflow, but from a retail perspective, it's still kind of hard to understand and to fight your way to all the meme coins and the shit coins to find what's actually real. But yeah, we hope in this podcast we can highlight the real things in crypto, and how and what is future proof, and what is gonna drive decentralized finance forward. So I think the Ethereum ETF is a very bullish sign, and it's gonna be a catalyst for much new things, products, features that will come. But that needs to go in lockstep with this institutional inflow, in combination with also something that will activate retail as well. So I think both sides need to be activated, and then we're going to see an explosive bull run very soon. I'm more confident than ever that that's going to happen soon. Yeah.
Excellent, excellent. And
I saw.
Yes, Sam.
Yeah, so I was going to say, Nathan and Dio, you guys both really said it well, but I wanted to also add, it's really hard to or overestimate how big this is, because as you said, Nathan, like the ETF is a way to access ETH for people that aren't on chain, but it's actually much more than that. It actually changes a lot of structures that people haven't thought about. For example, you brought up pension funds. That completely changes the tax structure for people investing in ETH. People don't know this so that well if they're across the world, but most of, for example, in the United States, if you invest in a retirement fund, you don't pay tax. You get to defer that tax, or the tax structure is totally different. So overnight, when the BTC ETF came out, the actual tax structure of BTC essentially changed as institutions allowed people to save for retirement in BTC. That actually means that you can lower your taxes by having a retirement account that invests in BTC. And there's all these other downstream effects that are too many to list that here in this event together. But as Dio said, like the BTC ETF changed everything to the point where it was like BTC going to all-time highs kind of felt like there was a bull market. But as people know that are in all of these different coins, whether it's like DeFi or meme coins and stuff, it wasn't so much that the other tokens hit all-time highs, right? Their prices compared to BTC haven't actually even started running up yet, right? So it was more like it was a Bitcoin bull market, and then the other tokens are kind of waiting to follow, so to speak. And that's why with the ETH ETF, it is like the conclusion or the second half, I think, of the cycle. Because I've been in crypto since 2013, and I've seen a lot of cycles. I've seen Bitcoin go to 1,300 for the first time from like $100, like $80, and it just it's really hard to overestimate. And like the ETH ETF, it is huge. You cannot overestimate it because it really is that big. And I think I don't really, I'm not a trader, so I don't really do price predictions, but I think your 9,000 is pretty conservative, to be honest. Maybe not immediately in the first few months, but in 2025 and 2026, because the downstream effects are just massive. And then as we're talking, this flows into other opportunities like LSDs, LRTs, and things like yield nests that optimize those yields. So yeah.
That's amazing. I'm super excited about that. Yeah. And if you go to our website and answer some very simple questions, you can win a yield nest NFT that will help you boost your ETH and a share of PEPE tokens. Cryptos Cobra, what do you think about the ETH ETF?
Yeah, so the first question I saw here was a question: is there any chances to reduce fees on the ETH chain fees? So when it comes to ETH, the fees are very high, and I was going to send a friend $1,000, and the fees was nearly $50. So it's kind of, the fees are high, but I do not see any possibilities that the fees are going to be lower at the moment. I think there are apps you can use on your phone to kind of target the actual when the fees are low and when the fees are high. So that's one question there. When it comes to the actual Ethereum ETF, we have, so I think that when the ETF comes out, you will see a slightly upward trend in the price, but then it can go a bit down again and then fluctuate sideways. That's just my personal opinion with the ETF, because that's what we saw when the Bitcoin ETF, the price went a bit up there, and then we had a slight kind of downward trend again. So I think that the Bitcoin or Ethereum ETF is a good thing for mass adoption in crypto, because then a lot of people can see that it actually is something of value and not just a number behind the screen. So
Absolutely, yes, for sure. And Emily, what do you think? Do you think it'll be a sell the news event?
Well, I think definitely it's gonna be huge, because the ETF is the most important narrative in this bull run almost. And since this is the DeFi panel, so if you look at the formation of the DeFi summer in last bull run in 2020, one of the key driver is the institution push, right? So, and also you can saw this bull run in this starting from the late last year and until now this year is mainly because of the Bitcoin ETF approved. So definitely I think that the institution adoption and the institutional push still gonna be a main driver of this market. Yeah, so ETH ETF is be huge.
Yeah, it will be. And we've got a question just come in, and maybe Emily, you can answer this. I want to stake my ETH on Bybit. Can you tell me which product to get?
Okay, so if you can go through the Bybit Web3 main page, or if I can share my screen now, it's gonna be very quick. Just hold on. Okay, we have several ways for you to earn your ETH on the Bybit Web3. Okay, so now we are at the Bybit Web3 landing page, and you can click here, earn. So under earn, you can see many products, different products lines, and then you can just go to staking. And by Web3 earn, the DeFi staking process is very simple and easy. So you can see all the networks we support here, and the top performing protocol I just listed on the first and second lines. And also we're gonna feature some protocols that we have strategic partnership with, for example, Ethena, and now we support a USDE on Bybit Web3. And you can just click staking. It's very simple. So
Nice,
if you want to earn some on-chain native yield, the high API yield, you can just go to Bybit Web3 and go to earn staking. Everything is here. And also we have features campaigns on the binary.
Yeah, that's great because it's all collected in one area. So it's not like you have to go and like find a site or like look on Twitter, try to find the correct account. It's all just collected for you, isn't it? Yeah. Okay. So we've also got an incredible sign-up bonus. So come and join us. Come and join in the fun. You can come over and sign up for Bybit, and we have $5,000 USDT in rewards today for all the new people who sign up. Up to 5,000 USDT. Yes, for new people who sign up. So come along, sign up, answer some questions, get your share of 36 million PEPE tokens, potentially win a Yield Nest NFT. And when you win, you can claim these things in our special live rewards section of the Bybit website, because we're always giving away rewards. We can't help it. We're just like all the rewards. We're giving them away. It's all good. Okay, so let's take a look at how we might be able to earn on our ETH, how to put the ETH to work. Because I hear this, I hear like, my money works for me, it's my best employee, as some rapper said, I can't remember. But you hear that. People talk about having their money and like earning, and you can do that on ETH. You can do that very well on ETH. So to get started, and do keep your questions coming in. So if you have any questions as we talk about this, just pop them in the chat, we'll get to them. So Cryptos Cobra, can we start with you? I know you had some thoughts on this. So maybe you could take us through some of these strategies.
Yes, so I was going to just talk a bit about the actual significant inflow of this ETH Spot ETF that I didn't cover earlier here. So the significance of a spot ETF kind of lies in its potential impact of the Ethereum ecosystem. So the first spot there is increased accessibility and adoption. A spot ETF allows investors, both institutional and retail, to gain exposure to Ethereum's price movements without the need to directly hold or manage the underlying cryptocurrency. Second, price discovery and market stability. The ETF structure can provide more efficient price discovery mechanisms for the Ethereum, as the ETF shares would trade on the regulated exchanges and be a subject to market forces. Number 3, regulatory legitimacy, if I pronounce that right. The approval of the spot ETF by regulatory bodies such as the US Securities Exchange. We all know that the US kind of do not like crypto in certain ways. And I think the only exchange is kind of Coinbase out there. So US needs to get the regulatory changes to kind of have it mainstream, because if you are in the USA, you have problems buying crypto, you have problems probably storing crypto. Is many ways that the regulatory changes may affect where you live in the world. Investor diversification. That's number 4. The ETF structure allows investors to gain exposure to the Ethereum as part of this verified investment portfolio. Number 5, liquidity and market depth. The creation of an ETF can contribute to increased liquidity and market depth for Ethereum, as the ETF shares would be traded on regulatory exchanges, potentially attracting more trading volume and market participants. So overall, the approval of a spot ETF or ETH ETF will, in time, get the price upwards. And if this will be a exchange-traded stock or on the other exchanges too, the price can really go up in price when all the old people that have a lot of money kind of come into crypto, see all the hype around it, see how much value Ethereum, Bitcoin, all of those cryptocurrencies actually have, and not just name.
Nice.
So
Actually, I have a statistic on that. In fact, according to a Twitter analyst, Trade the Flow, he said that every $1 billion of net inflows into the ETF could move the ETH price by 10%. So each $1 billion equals like another 10% on ETH. So that is very exciting to hear. Now, what I'd like to do is get over to Dio, and let's talk a little bit about EigenLayer, right? Because I'm hearing about EigenLayer. It's the next big thing. It's like perhaps one of the biggest things to happen since the invention of DeFi, but it is a little bit tricky to understand. So, this is your area. Maybe you could help us understand a little bit about how that works. And guys, keep your questions coming in, and we can get some questions on that too.
Yes, thank you so much, Nathan. And yes, indeed, it's a difficult topic, and that's also why, as with YieldNest, we want to reward people in the space, and we want to align our governance distribution power people in the space that understand it and that ask smart questions. So the 3 smartest questions or the 3 best questions will get the YieldNest NFT throughout the whole live stream. Back to restaking and how that is connected to the Ethereum exchange traded fund ETF, right? So the Ethereum ETF, as we just discussed, gives a lot of legitimacy to Ethereum itself. And as Crypto Cobra just highlighted, the Ethereum layer 1 fees are pretty high, but that's for a very clear reason, because blockchains have basically different feature sets, right? In my opinion, I always say a blockchain basically consists of 3 components, which is a execution layer, a data availability layer, and a settlement layer. Ethereum is a settlement layer, a global settlement layer. You can see it as the same way if you do a transfer on your bank account today. You are not really transacting with the central bank. You're actually transacting with this kind of ledger that's around the central bank, right? So it's kind of like a layer 2, right? And then that kind of syncs up into this main settlement layer, which is the Federal Reserve or the central bank, right? So basically, there's the same thing happening now with Ethereum, which is the main global, in my opinion, Ethereum is will be the global financial settlement layer. And you see all these decentralized financial apps and components kind of build around it, and they settle back to Ethereum, right? That's amazing, right? And that's why the Ethereum gas fees for that layer 1 are pretty high, because you should, when you are a user in crypto, if you go to Ethereum, that means that you have a large amount of money, or that means if you want to do an action that you want to be very, very certain of that it will happen with very high settlement assurances, right? If you are playing a crypto game, or if you're transferring NFTs, or you're buying maybe $1,000 or $2,000 worth of crypto assets, then it's better to use a layer 2 like Arbitrum, Base, or Fractal, or any other layer 2s that are on the market. And this kind of ecosystem is evolving in that way because blockchains are quite hard to scale, right? If you, for example, go to Solana, or you go to Elrond, or any of the other layer 1 blockchains, you basically go into a completely different security set. And in my opinion, most of those are have potential centralization issues or regulatory issues. With that ETH L1 settlement layer, we now have like very much certainty, regulatory certainty, and also certainty on like, you know, how to, the settlement assurances that it will stay online. Ethereum has like the best uptime of any computer system like ever, where other blockchains might go down, right? And then coming to restaking, because in order to secure this layer 1 asset, we have something called staking, and we have this really valuable crypto economic security on that layer 1 asset, right? With restaking, we can take that crypto economic security and move it to different layers of that stack and build blockchain applications that kind of have the same settlement assurance guarantees as those kind of L1, but with much lower fees and with easier to interact with completely new systems that we can build on top of that stack. So you could see restaking as this kind of another infrastructure layer in between the layer 1 and the layer 2s and applications around the global settlement layer, which is called ETH. And with restaking, the cool thing about it, you can see like if you have the Ethereum ETF, if you buy one asset, which is then ETH, which is then representing that security of that underlying global settlement layer. If you have a restaked Ether, you can actually have a stake in that global settlement layer, but also build other components around it. So you can then, for example, secure components of different DeFi applications, or you can secure different layer 2s, or you can secure different even insurance applications or risk underwriting or like banking apps or anything. And this is still early stage. So it's kind of like a new DeFi primitive. So that's why it's also a little bit hard to understand. And a lot of the things have been overblown. So if you look at EtherFi, Renzo, all these other ones, they have kind of oversold the promise of what it will be, in my opinion. And right now we're going into this second wave of restaking, where the projects with more real tech and more real like applications will come out. And yeah, it's a very exciting time. So and YieldNest is like on the forefront of the restaking kind of narrative and the eigenlayer narrative. And it's something that is going to grow exponentially, and it's just getting started. So we're still very early on the restaking narrative and DeFi primitive, and there's a lot of new things that will come down the line in the coming months and years in our ecosystem.
Nice. And before I pass that over to Sam, I've got a few questions coming in. So Dio, here's one for you. What happens if Vitalik leaves Ethereum?
Yeah, that's an excellent question, and this is a very old question, right? You have this kind of bingo thing. You can spin a wheel, and then there's different questions that come up of like, oh, Ethereum is not as decentralized as Bitcoin because Vitalik or something. Well, in the beginning, this would have been a big problem. If Vitalik gets hit by a bus or Vitalik leaves, then that's like very destructive for ETH, because Vitalik was kind of like pushing as a leader ETH. But this is many years ago. I think for the last 2-3 years, if Vitalik now goes away, it doesn't even matter that much, because actually Vitalik was away for, I think, most 6 months to a year. He was mostly working on some other things with live extension and some other like governance things and deeper research. Right now he's more back, so he's working more on some new EIPs, Ethereum improvement proposals. But he's just part of this whole kind of hive brain, I call it, right? It's a hive. It's such a big group of people all contributing to this main open source technology stack, and that just grows over time. And it's really hard to compete with that, because you build up that technology stack, you clean, that code gets cleaner and cleaner and cleaner. And that's why I'm more of a fan of blue chips and longer existing code bases. As the software developer, you always check in the GitHub repo or whatever, like how long does it exist, how many stars and how many forks does it have. And then basically the same thing is with ETH. ETH is around for such a long time. I think it has the biggest research community, even over Bitcoin. If you go to ETH research, it was also my first place where I landed as a research and software engineer. And I think it's attracting the most talent still. It's going very hard. The funny thing is that like all the other shiny objects, I would call them, taking away a lot of the kind of financial attention. But on the background, the developer attention is still very much on ETH. meaning then if Vitalik goes away, there's enough people to kind of take over from Vitalik. It's a completely decentralized protocol. So if Vitalik goes away, it doesn't really matter. It would be a shame because he's a very smart person, but there's a lot of other smart people in the ecosystem that could give good input. Yeah.
Nice, great. Thanks, Theo. Yeah, and also we still have the live sign up bonus for people who come and sign up today. We've got up to $5,000 in USDT to give away, and also come over to our website and have a look at the questions below this video. They're pretty easy, they're pretty fun. Just fill in your answer. You can win a share of 36 million PEPE tokens, and Yield Nest NFTs are up for grabs. So that's an NFT which gives you exclusive benefits for the Yield Nest protocol, which is a restaking protocol, as Dio was just talking about. Just one more quick question. This one's for you, Emily. What's your favorite L2? And do you think Matic is, sorry, not Matic, Polygon. Where do you think Polygon fits in amongst the sort of L2 community? This is a question we've had coming in from the live chat. So yeah, interested to get your thoughts.
Interesting. Yeah, because to be honest, I don't have my favorite layer 2. I have to be honest with it. And if I have to choose one with huge potential, maybe base chain is currently the layer 2 chain that I'm looking at now. Of course, there are many other layer 2 chains that have been there for quite a while and been proven very successful. For example, Optimism. I quite like Optimism because OPStack actually reduced the complexity of the developers. And also we have Mantle, of course. It's Bybit. Let's say we have like strong relationship with the Mantle layer 2 chain as well. And also we saw Polygon like Matic as one of the earliest sidechain solution of Ethereum. So there are many protocols there like solving the similar problems with different approaches. So I think this area is still like a blue ocean. There's so many solutions there that you can choose from. Yeah. It's quite broad answer and vague answer, but I really don't have my favorite layer 2s.
Okay, well, if we go over to Sam, I'm pretty sure I know what your favorite layer 2 will be. It's
well, I think you guessed right. And yeah, so Frax has a lot of stuff in its ecosystem, and recently we launched Fraxel, which is our modular rollup, which is an L2. And as you can probably guess, it is my favorite. I spend all day trying to build stuff on it, actually support developers, and actually invite anyone to try it. It has really unique incentive system. So just using the L2 and bringing assets to it, and actually using transactions gets you Fraxel points. It's actually the only L2 where we have this thing called block space incentives, which is instead of paying gas, which is almost near zero, under a cent on Fraxel, you actually earn Fraxel points for actually using the chain and interacting with smart contracts, and also bringing certain assets like say Frax Ether, Frax assets, LRTs will be added, and other things as well. So we've developed it to be very unique, very useful for getting yield, building DeFi applications, since anyone actually building on it, anyone interacting will start earning points. So there's like yield for just essentially existing, using the chain. Every block, there's Fraxel points to be earned in every block, which is a unique thing to us. And I think a lot of rollups will probably be inspired to do something similar. So like if we see that in the next few months or something, they say imitation is the greatest source of flattery. So where it started. But I highly recommend everyone check it out. We're building cool stuff, bringing Yield Nest there, Stake Frax Ether is already there with everything. And so that's definitely my favorite, but there's obviously a lot, right? There's my favorite site for this is L2Beat. It has a list of all L2s as well as even L3s that are coming out, right? Which are blockchains that settle to L2s. It's kind of an interesting fractal, essentially, where the Fraxel chain gets its name. And so you can actually just check out all other L2s. There's obviously Base, everyone knows that. And then there's also Polygon, ZK, EVM. But I'd highly recommend people check out L2Beat. It's basically like the CoinGecko or CoinMarketCap of L2 rollups. So yeah.
So Sam, what's like the main I don't know, benefit that a new user can expect from engaging in the Frax ecosystem?
So Frax is, as we like to say, it's a decentralized central bank. So we issue important currencies that have yield. So we have the Frax stablecoin, which is USD peg. It has a SFrax token, staked Frax, which earns yield in USD, which actually has RWA yield and other types of yield from on-chain. It also has the LSD, which we were talking about, staked Frax Ether. And then we're also working on a few other assets in the future, like Frax Bitcoin, which has Bitcoin restaking yield, but that'll come a little bit later. And the idea with the Frax ecosystem is it's essentially a self-sustaining economy, right? It has currencies in USD pegs, it has Ethereum pegs, and there's places where you can earn yield, take out loans. We have Frax Lend and other ecosystem projects. We also obviously have AMMs, Curve, and Convex are a big partner that we've been working with for years, both on Ethereum mainnet, but also on Frax, still they're natively deployed. And so if you think about what Frax is that it is essentially a digital country, a digital nation. There's places you can get credit or loans, right? There's places you can save in whatever currency that you like, Ethereum LSDs that yield, or holding dollar stablecoins like Frax itself or other ones on Fraxco as well. So you can actually do the entire kind of thing a digital economy has. And so we want to build that up so that there's sustainable, important, large-scale, scalable yields, and also a wide, rich ecosystem of applications that can actually be built on a healthy economy. One thing I like to say is like DeFi is essentially the bedrock of everything else that gets built on blockchains, because it's not a coincidence that DeFi was the first thing that really took off on Ethereum after the whole, ICO craze, for people that remember all the original tokens that got minted, right, and sold and everything. What happened after that? Well, the thing that happened after that is on-chain liquidity, right? Like AMMs like Uniswap, Curve, on-chain lending like Compound and Aave, and then things like Frax and DAI and all of these other things, then LSDs after that. And then on top of those things, extra innovation is built, like NFTs or fun games or things like that, in order to actually build a really vibrant economy, whether it's like games or collectibles and things like that. You need a liquid system on a network. You essentially need a financial system that allows you to sprout and create all of these different really fun, really rich and engaging applications, collectibles, and things like that. So with Frax, you can kind of think of it as you essentially need a bank, right? A digital banking ecosystem on a network. And so Frax is a decentralized central bank, and it's based in Fraxel. All of the native assets are there. Frax Lend is there. You can lend or borrow. There's Frax Swap. There's obviously all these other ecosystems. And so we specialize in DeFi, but Fraxel is a totally generalized ecosystem, right? There's going to be NFTs. There's actually Frax name service, so people can get .frax usernames. They can actually start building and having human readable names and other features that we're releasing. So it's a full-on culture. We like to call everyone that's into it Fraximalists. And as Emily said, she knows Frax from the early days, and we like to call them OG Fraximalists. So it's a whole ecosystem, and if anyone's really interested in exploring it, we're super friendly, and you can join our Telegram, and it's always a good time. I'm always there.
Right, nice. Thanks so much, Sam. Yeah, this was great. So okay, so let's just have a look to the future, because I know, Sam, you already sort of were talking about some of the innovations that are coming to ETH, and like it is programmable money. We hear that a lot, and that means that it's like money that's also software. So there's so much interesting stuff that can be done with it. So if we are like looking to the future, we've got these great products. Well, we've got the ETH ETF. We've got Yield Nest and other liquid restaking platforms that are just being launched. and we've got Frax, decentralized central bank, along with other, OG DeFi protocols like Curve and Aave, battle-tested ones. Uniswap's another one. And we're seeing a lot of development with L2s like Base and Optimism. Mantle, of course, are doing really well. So we've got so much going on. It's very hard to predict the future, but maybe we should try. Because when it comes to investing, we always want to be thinking ahead. And if you want to get some free tokens, you can come over to Bybit, answer some questions, win a share of 36 million PEPE tokens, and also a yield nest NFT, which will give you exclusive benefits in that ecosystem. So come along to our website. If you're watching on YouTube, you might need to click over to the Bybit website and answer those questions. You can be in with a chance to win. And if you sign up to $5,000 worth of USDT is going for new signups today. Okay, so Cryptos Cobra, maybe you could help us out with the next phase of this conversation, which is ETH Beta. So these are projects that are built on top of ETH, like YieldNest, Frax, L2s, right? And these they may benefit from an increase in ETH price. So if say ETH increases 10%, some of these might do 20% or more. Okay, so that's an ETH beta, right? So Cryptos Cobra, do you have a favorite ETH beta? Or if not, how would you select one?
So there are a lot of layer 2 crypto coins out there. So my overall favorite below Ethereum is actually Polygon, and then you have several others. You have Arbitrum is one very big coin there, but these are they also have, some of them also have their own chain. So it's Polygon has a smart contract on the actual Polygon network itself, and then they also have a contract on the Ethereum chain. So it's if you are new to crypto, it's quite hard to get your head around it, but it's yeah. So I think the price of one coin can go down while Ethereum goes up, and let's say Polygon can go up while the Ethereum price goes down. So I don't see quite a huge connection between them, but Ethereum is one of the biggest chains out there. So a lot of new coins are created on the Ethereum chain. In the past, we had a lot of meme coins created on the Ethereum chain. Now people are switching over to Solana chain and even some other chains there too. So not only on the Ethereum chain. So yeah, hope that answered the question.
Nice. That's great. Thanks so much. And Emily, maybe you could tell us some of your favorite ETH beta plays. Not financial advice. This is stuff for you to just check out. Yeah, what are you watching in the ecosystem?
I mean, the ETH ecosystem. I'm still very exciting about EigenLayer, about rate staking. Yeah, because it sounds very simple. Oh, EigenLayer is a protocol built based on Ethereum, and it's a rate staking protocol. But if you think about it, it gives you a solution that you can you can take your staked ETH and stake it once again. So which means it increased the liquidity of the ETH staking significantly. And also the introduction of EigenLayer AVS is reduced the criteria and the barrier for developers to develop based on the ETH ecosystem. So definitely we can see a lot of supply side coming out. And on top of that, the demand side, if you stake your ETH, and then you can restake your ETH and earn some rewards. So it's a full cycle loop. So I still think restaking is the future of Ethereum ecosystem. And yeah, I think for now, we see many good projects working on this, like say, for example, Puffer, Renzo, EtherFi. Yeah, but I think there will be more and more protocols built on EigenLayer and can maybe give us more, the most exciting things to play around with.
Very cool. Yeah. Yeah. So, the liquid restaking or the restaking in general is like an entirely new development. We have no idea how valuable this could be. So, yeah, definitely worth getting to know and checking out. And on Bybit Web3, do we have a way for people to do that, Emily?
Yes. It's still on that session, the earn staking session.
Right, yes. So we can go onto the Bybit Earn section and you will find liquid restaking options there. And there's some very high yield there. And we might be getting some people in.
Yeah, sorry. And usually Bybit Web3 will have some exclusive benefits we earn from the partners, and will give us users extra bonus on top of the native yields.
Great, that's very cool. Okay, so I just have a, do guys keep your questions coming in, because we're going to have a little chat now. I see, yes, we've got some questions coming through. So yeah, do keep them coming in. And new signups today, up to $5,000 in USDT for you, and extra prizes for people who come in and answer some very simple questions down below on this video on the Bybit website. So here's something that I wanted to ask you guys, because I think, there have been some difficulties in crypto recently, and one of them is this whole high FDV, low float thing. And that's the idea that, maybe people are perhaps getting a bit disenchanted with governance tokens. And I know Dio, and I think you as well, Sam, you're very bullish on the OG DeFi protocols. Like Curve and Aave and stuff like that. And they've been struggling recently. And some people say that's because the tokens don't actually really accrue any value from the protocol. So while the protocol might be profitable, token holders don't really share in that profit. And that could be a regulatory issue, or it could be a design issue. And it's something we hope might change in the future. But at the moment, I feel like that might be a little bit of a barrier for some people engaging with some of the protocols that you really love. So I'm very interested in your take on that. So if you have any ideas.
You want to go first, Sam? Shall I go first on that one?
Well, I'll go first. So first of all, yeah, I think as DeFi OGs, we obviously do have opinions here, but I actually correct you on a little bit of, but I which is Frax, Curve, Convex, FXS controls everything in the Frax ecosystem. It's listed on Bybit, which is great. But we do distribute yield. In fact, if you stake it as VFXS, the rewards that come from fees that are sustainable, it's not token inflation. You actually do get a share of all of them, which is great. Which is where my FXS is. And a lot of people stake it, and there's other places like Convex that you can stake with them, and then they give you a CVX FXS token. Curve is like that too. There are tokens, like you're saying, that sort of have this, Uniswap is the most famous one, right? It's the biggest DeFi protocol, yet it somehow just never seems to give any kind of ownership or fees. And so I think that there is a big difference between those two tokens. And I think once the ETH ETF is out, there's more excitement and things flowing to DeFi. All these tokens like FXS, CRV, CVX, DeFi OGs like Aave, for example, all these tokens like SNX from Synthetics, all of them will have a really big resurgence, right? And so people will realize that there is actually a lot of sustainable cash flow that's distributed. But I'll give it to you.
Just want to follow up. So I've got a follow up question on that, which is, doesn't that are you concerned that that might make FXS, which is your governance token, which earns the yield, as you said, are you concerned that might put you in the crosshairs of some regulators who might consider that a security?
No, actually, the cool thing is that because everything is decentralized in the sense that there's no Frax company. There are Frax core developers, of which I am, and there's a lot of in the world. We have like 10, 11 core developers, and there's people joining and contributing and everything. I think it's pretty clear, especially now after the ETH ETF, right? Maybe it wasn't as clear, right? But especially now that we're discussing the ETH ETF, which does have effectively a buyback and burn, right? Which is like people pay gas, and then that goes to burn ETH, which is the same mechanism as a stock buyback. Which what does it do? It takes cash flow and it buys stocks, right, in a company, right? When a company buys its stocks back, and then it burns them, right? It takes them out of circulation. If ETH is not a security, right, and if there's a decentralized protocol like Curve or like Frax that are doing a similar decentralized algorithmic mechanism like this, and the protocol is decentralized, there's not a corporation, there's not a headquarters, it's not something that has a bank account, right? It's totally decentralized. It has its own blockchain. It lives as a blockchain and a protocol. We're actually the least concerned we've been, honestly, since the launch of Frax, because of the ETH ETF, right? Because of the fact that there's more and more clarity coming, that it's possible that things can change, but right now they're changing for the better. So I actually feel much better than especially after the ETH ETF decision, which again, another downstream effect of why it's so bullish. Not just pensions, not just inflows, not just everything, but so much sentiment change around that single decision.
That's fantastic. Yeah, well, I'm really glad that you feel that way, and that's great to hear. And also, if anyone is interested in purchasing the FXS token, you can do so on Bybit. And we also have over 1 million tokens across 9 chains on our DEX Pro, which is on Bybit Web3. So once again, if it's a little bit complicated to navigate DeFi directly, you can go to Bybit Web3, and we've laid it all out there. We've collected it all. We have over 1 million tokens, and it's all there for you with explainers and everything. So yeah, definitely worth checking out. Dio, I got a question from the audience, so do keep those questions coming in, guys. And the question is, what makes restaking on EigenLayer more profitable for your ETH?
Yeah, that's a very interesting question to kind of follow up on a little bit of what Sam said, and in the decentralization part and the revenue part. I think FXS is basically just revenue generating token, and it's a protocol, and it's not only the Frax team working on it. Like, I mean, YieldNest will contribute to it. Curve is contributing to it. Frax is contributing to Curve. Curve is contributing to Frax. Like, it's this whole mesh network that's kind of existing, high brain. So and there's real revenues in these protocols, and Frax, Curve, Convex, all these protocols are generating real yields, right? Segueing into restaking and EigenLayer. So how you can see this, like, normally if you have ETH, just naked ETH is like the native ETH without staking it. It's just an asset. It's just like Bitcoin, right? And if you then stake it, you're actually securing the network. So you're earning this yield while staking and securing the Ethereum network. With restaking, and not only with EigenLayer, there is also other restaking protocols that YieldNest will plug into on a vertical level, where we're now looking at EigenLayer, which is the furthest along, the first mover in this space. We're also looking at Nectar and at Symbiotic. So these 3 restaking protocols, we're all hooking into it because it's such a fast-moving space, where before we saw only this Ethereum network that you can secure. But now with that same token, you can actually underwrite 3 different protocols: EigenLayer, Symbiotic, and Nectar, and many more things in the future. So that will obviously translate in a higher yield than that base Ethereum yield, right? So if you just hold ETH, and if you're bullish on ETH, just hold it, play it, like have that asset, and you should get the maximum yield on your ETH. And that's with YieldNest. With YieldNest, you can get exposure to EigenLayer, Symbiotic, Nectar, all these restaking protocols you can get exposure to in a single, via a single protocol, basically. And in the protocol, when we do ETH restaking, you can even restake Frax assets also in the future, where we're working on a YN USD E and USDS kind of asset that kind of wraps around the Frax stablecoin, wraps around the Athena stablecoin, and you have like a stable exposure to a stablecoin plus all the underlying yields of restaking and all the underlyings of that stablecoin. And also with the ETH YN LSD, you get exposure to like stake Frax ETH and the underlying LSDs in that kind of restake basket, and you get exposure to these restaking protocols, which will eventually then translate into more yield. It's still early days, so the yield is not like 20 or like 30 or 200%, but it's a higher yield, and it's something that's going to be very big in the future, especially from an institutional level, for example, where right now actually the stake Frax ETH liquid staking derivatives is the highest yielding staking derivative with around 3.8% yield. And then if you wrap that in a restaked version of that and make that liquid, you can then do other things with it. You can go to liquidity pools, you can like compose it, but then your risk curve goes up a little bit. And it's kind of depending on yourself, how much risk you're willing to take and how much yield you want to get. You can get up to maybe 10 or 20% if our pendulum markets go live. And on the Frax lending market, you can leverage up your yield. So it's kind of up to the user how much risks he wants to have. YieldNest kind of gives this pure risk-adjusted, kind of very stable restaked asset, and then a user can go up the risk curve how far he wants to go. So yeah, it's up to the user.
It reminds me a little bit of the dividend ETFs from traditional finance, you know, where they sort of collect all the dividends from all the different companies, and then they sort of package them up and then like pay them out to all the holders. So it's like you're talking about that, but you're like combining dividends on dividends on dividends to make a fractal, like Sam said. Okay, so I'm afraid we're going to have to start wrapping this up. This has been super fun. Before we finish, can you guys give me a number? Okay, just one number. The price of ETH on December the 29th, 2024. Cryptos Cobra, what's your price prediction? Okay, you're muted, sir. You're muted.
So at the moment, the price is kind of $3,450. I think at the end of this year, if everything goes in place and the actual ETF comes and it gets mass adoption on not only crypto exchanges, but also the other people that have a lot of money on stock exchanges, I can think Ethereum can reach $10,000 in the next, but this is not financial advice, okay? Just my personal opinion, because when people build on Ethereum chain, it gets bigger and bigger and bigger. And if you can't even have all the tokens that's created on Ethereum chain on one hand or two hands, it's a lot of tokens on the Ethereum chain. If you want to see all of the tokens on the Ethereum chain, you can go into Etherscan. You can check it out yourself. There are a lot of tokens there. So yeah, I think 10,000 is.
Okay, wow, that's great. Emily, what do you think?
Okay, this is my favorite part, brainwash myself. So probably at the end of this year, I hope it can hit, okay, give you a range, maybe 6,666 to 8,808. Yeah, my favorite level.
Nice. Dio.
Yeah, thank you. I actually made a prediction on this on the Ivan on Tech channel, and I also have a blog post on our YieldNest Medium where I outline my exact cycle predictions for this cycle. Interesting to note is that in 2019, I had a DeFi fund where we were managing we were managing a DeFi fund, and I almost perfectly timed the 2022 cycle, and it's also recorded on video. And it was a very simple kind of calculation that I did. I looked at historical data. I looked at cycle repeat data, which you can just find in most of these charting websites. I'm not a big trader myself. I'm more of a cycle or of like a wave kind of analyst. And then I base it on deep technical research. And I don't look that much at charts. I mostly look at like fundamental research and cycles and waves. And from that research, I kind of made the prediction that my conservative price target, and it's not at the end of this year, it's probably going to be a bit overflowing. So probably mid next year, I would say. My conservative Ethereum price cycle target is $12,000. My neutral bullish one is around 19. And my optimistic, like super bull cycle is 30K. So I have quite a range of targets there. And I did think quite deeply about this. And I hope, well, I'm quite certain, like there's no certainty, of course, that we're going to reach these kind of price targets, but we're going to see for sure another cycle. And yeah, super cycle. I actually not want to say that, but everybody always talks about these things, but I don't. That's like dangerous. If people talk about super cycles, you normally should sell your assets. So I'm not going to say that, but I do feel that this is like the build up towards this cycle and this momentum that I feel building up in the market, making me very bullish on ETH. And I think that all the shit coins or all the meme coins or all these new like kind of things, the shiny objects, watch out with that. Just look into the things that are real, that are building for many years. You can actually look into the GitHubs, you can look into the code, you can look into what they're building. For example, it's building so hard with its team. It's very impressive, and Curve and Convex and all these other Aave, all these blue chip protocols. Look into that. There's been a lot of effort in the space, and yeah, just look at that. Look at what's real. And ETH is real, like the blue chip, the kind of DeFi protocols around that are real. If you position, I think, yourself into that and ride that cycle, get the maximum return on your ETH with something like YieldNest in combination with Frax, Curve. We kind of give exposure to all of that. You can get maximum return and ride that cycle. It's probably better than trying to trade it. I got into crypto in 2012, like myself. And if I would have just holded the ETH and Bitcoin that I had in the beginning and just did nothing, I probably would have done better than now. It's the biggest advice that I would have is that humans are not really good at exponential growth thinking, and I do believe these price targets are realistic this cycle. So let's see. Exciting times.
That's amazing. Yeah. Always good to buy and hold. Sometimes it's the hardest thing to do. Sam, very quickly, we're running out of time. What's your price for the end of the year?
First of all, I just want to say, not trading advice. I build stuff. I don't trade. I'm not good with prices, but I will say that for the end of the year, I think over 9,000. So over 9,000 for ETH. And then as Dio said, if you think about how that beta plays, right? That's only a 3x, which is amazing, right? If that's right. But then think about it for protocols, for example, like Frax, where the TVL of staked Frax Ether in dollar terms will 3x, right? How does that actually affect the FXS price? Probably more than a 3x, right? And think of like where YieldNest has all of these different LSDs and LRTs, right? If ETH 3x's, YieldNest TVL will 10x or 20x in dollar terms, right? And think about what that says about the actual value of the YieldNest token and things like that, where we're talking about ETH beta. You have to see, well, a 3x on protocols that actually have deep integration with ETH in terms of TVL, those could be a 15x or a 20x. But again, I don't even know if that's the right price because I don't trade, I build. And so, but that's my take in terms of that's what I hope to see by the end of the year.
That's awesome. Wow. So yes, big numbers, not financial advice, of course. And just before we finish, we have a few winners of the YieldNest NFT. So holders of this NFT will be entitled to a 15% boost on their YieldNest seeds. So to find out more about that, you might need to go check out the YieldNest website. So winners are a username, Risk Management. So nice and cautious individual. I like that. I'm going to struggle to pronounce this. I'm going to say Dash Rathdan. You're a winner, mate. And also someone who's remaining anonymous, but the first 3 letters are Ron. So yeah, we're just highlighting Ron there. So you are also a winner. And do come along and check out our website. Answer the questions below. 36 million PEPE tokens to give away. And yeah, so I feel like that's a wrap, guys. So thank you so much for joining. We've had Sam Kazmian from Frax, Amadeo Brands from Yield Nest, Cryptos Cobra, Emily from Bybit. I've been Nathan, and thank you so much, and see you next time.
Thanks, everyone.
Thank you.